What's up, guys? Welcome back to Money So Tasty. Let's all get a taste of capital. In our last episode, we talked about pre-construction and pre-construction assignment. We mentioned the relationship between resale properties and pre-construction deals are sort of similar with the relationship between stocks and options. In that pre-construction has this future price component, and it's also highly leveraged. So you only really need to put down a small amount of capital, and how you can really turn, for example, 50,000 into 250,000 in 3 to 4 years. If you haven't got a chance, check out the last video. So in our last episode, we mentioned how we price the pre-construction deal so you don't have to overpay, or as a seller, you don't undersell. Today, we're going to talk about how exactly we can calculate the pre-construction assignment price. So as a buyer, you know exactly how much I need to put down. At the end of this video, we'll also review to you, as a buyer, is it better off, let's say I'm buying the same 600,000 one-bedroom unit. Is it better off to buy a pre-construction deal assignment, or is it better to just buy resale properties? We're going to compare and contrast the differences. If this is your first time to our channel, this channel is all about sharing on your journey to financial freedom. What are the money-making or investing mindset you need to have? And what are the common pitfalls we have been seeing that you want to avoid? If you want to become financially free with us naturally, then make sure you subscribe to this channel, give us a thumbs up, and open your little notification setting so you will never miss another pie in the sky. Now, first, let's talk about assignment price. Assignment price is basically the price the buyer needs to pay right now to get the pre-construction assignment deal. Now, it's made up of two components. It's made up of the original deposit that the current seller, which is the original purchaser from the developer, the deposit, and the appreciation, so the gain in the contracts. Okay, let's give an example. Let's say the seller originally 3-4 years ago bought this pre-construction deals from the developer. At that time, this unit is worth $400,000. Now, remember from last time, we said pre-construction is highly leveraged, so you don't need to put down a whole lot of capital. Usually, you only need to put down 10 to 20% in a series of payments in 1 to 2 years. So in this example, let's say this seller put down $50,000 to get this $400,000 unit. Now, fast forward 3-4 years to today, now prices probably have gone up if the real estate market is in a very stable, good condition. So the 400,000 unit probably is worth, for example, $600,000 now. So from $400,000 to $600,000, there's a gain of $200,000. And this gain of $200,000 all belongs to the current seller, which is the original purchaser. So in essence, the seller put down $50,000 and now his contract is worth $250,000. He just made 5 times that amount. So the assignment price, in order for the buyer to get this contract, is the original deposit of $50,000 plus the gain in the contract over the last 3-4 years, which is $200,000. In total, $250,000. So you probably think, wow, that's a lot of money just to get this contract. Now let's see what will happen at closing. Remember, this unit is worth $600,000 now. It's priced at $600,000. You down paid $250,000 by getting this contract. So at final closing, you really need additional $350,000, which usually it's in the form of a mortgage. Now let's think about it the other way. From the developer's standpoint, he really just sold the property for $400,000, which is the original price. Now he got $50,000 initially through the deposit, and he will get what? Additional $350,000 at closing, which is from the mortgage. So really you have 2 ways of calculating. You can calculate based on the original price, which is $400,000 total, $50,000 down pay, and $350,000 mortgage. Or you can calculate in terms of the current unit price, which is $600,000, in which the buyer needs to down pay $250,000 and then gets the $350,000 from the mortgage. Now, I know this might be a little bit confusing, but I think given this scenario and this example, you probably now understand how you can calculate assignment price. And as a buyer, how much you need right now is really $250,000. Second thing we want to look at is, are there any other costs associated with it for the buyer and the seller? So for the buyer, after this deal, you really want to look at is at closing. At closing, there is this carry-on warranty, which is basically a 7-year warranty on the structure of a building, mostly for new condos, new buildings. And you're also looking at closing costs, which could be land transfer tax, could be lawyer fees, could be mortgage fees. So those are all the fees the buyer needs to consider when you're buying this pre-construction assignment. Make sure you set aside probably another $10,000 to $20,000 for something like this. So now let's talk about the costs for the seller. Well, the first cost for the seller is really taxes. Now, we mentioned before, we really need to talk about taxes when we talk about investment and asset management, because without talking about it, all the returns are futile, right? They're not real numbers. So the first thing is tax. Now, there are really two forms of taxes relating to this pre-construction assignment, because CRA, or Canada Revenue Agency, treats this type of deal as a business income. One, there is income tax. Whatever you made, right, from $50,000 to whatever the amount you made, let's say $250,000, you're making an income, so you have to pay income tax. Now, you also have to pay HST, which is 13% of the assignment price. In addition to that, we have the common real estate transactions fees, which is lawyer fees and realtor fees. Now, finally, let's talk about, let's say you want to buy a condo unit, let's say 1-bedroom unit for $600,000. Is it better to buy resale properties, or is it better to get something like a pre-construction assignment? Well, first thing we need to look at is your preference, because we talk about one of the main advantage with pre-construction assignment is you're getting a brand new unit and you can move in relatively soon. This is an advantage of a pre-construction assignment. So you really need to ask yourself, do you want a new unit or do you want a pre-owned unit? Now, I've talked to quite a few fellows. Some say, I really just prefer a new unit. I can have some customization. It's new. I like it. Whereas others probably don't care new versus pre-owned that much. They think 5 years, 6 years, 7-year condo, it's not that bad. So you really have to make that decision yourself. And another thing relating to this is usually newer buildings have smaller sizes. Smaller size in terms of overall indoor interior square footage, as well as just the visual appeal, right, in terms of the depth and the width. So you want to ask yourself, do you rather have a new unit, which might be a little bit small, or do you want to have a pre-owned unit, a resale property that might be a little bit more spacious? So that's the first thing you want to look at is preference. The second one you want to look at is how much money you have, how much cash you have right now for the down payments. Because for the pre-construction assignment deal, we have already calculated. You have to put down $250,000 to own this $600,000 units, which can be a pretty high percentage. If you calculate this percentage, it's almost 50% and sometimes can even exceed 50%. But if you want to buy a resale property, then you can determine how much you want to put down. And obviously that depends on how much mortgage you want to qualify. But let's say usually people tend to put down 20% to 30%. As a $600,000 unit, then you're looking at $120,000 to $180,000, which is much, much less than $250,000. So you really need to ask yourself, one, do you have that much cash sitting around in order to get this pre-construction assignment? And two, do you want to really put down that much instead of getting more mortgage? Okay, that's it for today, guys. Hopefully that just gives you a little bit more knowledge and details into the process of pre-construction assignment. That makes you a little bit more comfortable into buying a pre-construction assignment deal. What is your views, thoughts, or funny, interesting story relating to pre-construction assignment, or just overall investing in real estate in general? We'd love to see your comments below. If you have any questions relating to this subject, feel free to leave your comment too, and we'll try our best to respond back to you. On our journey to financial freedom, we need to form some good habits. So why don't we start with the following 3 little habits? If you haven't done so, make sure you're subscribed to this channel so you will never miss another pie in the sky. Give this video a thumbs up and share with your friends, family, buddies who you have talked about similar topics with. Congratulations to making to the end of this video. Money so tasty, retire so early. Until next time, remember, you're freer than you think.